Greetings, Ted Hicks, founder, CEO, and Chief Investment Officer for Hicks & Associates Wealth Management. Today's Friday, January 21st. The market closed an hour and a half ago, something like that. And pretty bad day in the markets and bad week, I'd say, and not a good start to the year. So as we are about a week away from our State of the Union webinar, and at the end of such a bad week, I thought I'd shoot a brief video to give you a little bit of insight into where we're at right now. And again, obviously another plug for our State of the Union webinar next Friday the 28th at 12 noon. So on the screen right now is the S&P 500 is shown at the bottom. That is the most widely quoted index for the broad market. Obviously, we hear a lot about the Dow Jones Industrial Average, but remember the Dow Jones Industrial Average only has 30 stocks in that average. So the S&P has 505 stocks in that average right now, and that's listed down here. The reason I'm showing the SPY ETF is because my official index charts don't update until 6 o'clock. And so I thought I would show you the SPY ETF just to show you that that broad index, the S&P 500, ended the day at about the 200-day moving average. That's the black line on this chart as well as the other charts I'm about to show you. So sometimes the 200-day or any of these major moving averages, that sometimes those averages will serve as support and the market or the stock or whatever will kind of bounce and kind of rally off of that. Naturally, it's a pretty big question as to whether or not the S&P 500 is going to rally off of this 200-day moving average. Right now, we're down about 8% from the high on this index. Now, historically, in this industry, a lot of people consider a correction to be about 10% in an index or a stock. So technically, by that standard, by that definition, the S&P 500 is not in correction territory just yet. I would say that it is, but it's not at that 10% level just yet. So let's look at the Nasdaq. When we look at the Nasdaq, again, this is the official chart, and that official data isn't going to update until a little bit later. When that official update comes in, that today's candle is going to put it down right at this level right here, which is going to be mean that we're down about 14.5% from the high on the Nasdaq. So again, the black line is that 200-day average, and you can see it did not act as support in this instance, and we now have 4 closes in a row below this 200-day line. That is not a good sign at all. Now, and finally, let's look at the small cap space. This is the small cap Russell 2000, which is one of many ways to measure the small companies that are traded on the exchanges here in the United States. Well, this one is, I'm going to argue this is already in a bear market. So technically, people usually consider a bear market to be a 20% correction or greater. So 19%, I'm going to round up and call that a bear market. At least it is right now. Who knows what will happen next week? But you can see that this index came off of this high. We finally had a breakout. You might have seen the video that we did after we got this breakout. It's very good news. Rallied for 3-4 days, and then it started to crumble. Came back down to this 200-day average. You can see it hung out there for a couple of days, rallied, only was able to stay up a day or two, fell back down, went and created a lower low, which is not a good sign, and then did rally again, and again it came back down. So now we're down about 19%. So again, in the industry, generally speaking, a bear market is considered a 20% correction or greater. 5 to 10% corrections, they tend to happen a lot more than bear markets. So last year, 2021, we had a lot of what we'll call mini corrections, a lot of 5% corrections in the broad index, the S&P 500 in particular, and then the subsectors, or the sectors, I should say, of that broad index, there was a lot more of these mini corrections. But we haven't seen a bear market in really since the COVID crash. And so the question on everybody's minds as it comes to the stock market is just, is this going to be an official bear market? Again, small caps, I'm going to argue, are already there. The question is going to be, will Nasdaq and the tech stocks, will they continue to fall now that they are below that 200-day moving average for 4 days in a row, and will the S&P follow suit? We will see next week. That said, next Friday, the 28th of January, we will be holding the State of the Union webinar. We'll go into a lot more detail. It is open to anybody. You do not need to be a client, so you're more than welcome to register. I'll put the registration link in the comments section below, and just feel free to join us and send us questions in advance if you like, or we'll be doing a Q&A then as well. In the meantime, we hope you have a good weekend. If you're here in North Carolina, we'll see if this snow actually sticks, and hopefully your kids get to enjoy it a little bit. Otherwise, have a good weekend, and we'll talk to you soon. And thanks for watching.